Good morning, everybody. Welcome back to another pre-market live here with the Everyday Growth Advisors this morning. And non-farm payrolls just came out, so we have some action going on right now with the S&P 500 temporary buying up. I'm not sure what the news is. Let's see. Labor, August non-farm payrolls plus 315K. Consensus was 318, so a little better than expected job numbers. Unemployment rate at 3.7%. That's better than expected. And also the earnings, hourly earnings improving a little bit. Private sector payrolls and government payrolls plus 300K. Okay, not too bad, not too bad. That's better than expected job numbers, but whether this holds and whether we don't get any downside pressure is another thing altogether. If you guys have been following the live stream, you would realize that we hit it once again on the nail. Good morning, guys. Welcome in. Perfect bounce on the 39.10 as we had predicted this whole past 2 weeks from this wave down. Now, this week was particularly a challenging week for me on the small account. I made a stupid mistake day before yesterday, And I'll be the first to admit that it was the most dumbest mistake that I have made in a long time. I set a trade up. I took a break for a little bit, walked away from my computer, didn't put a stop loss on it. It became worse. That was on the small account. Luckily, I did. The only good caveat about this whole thing was I didn't take the same trades on the main account, like the big account. So it didn't get too bad. But on the small account, I managed to somehow botch a very bad trade. Two trades actually, Nvidia and Microsoft. And what happened was I took the trades, I walked away, came back. It was down almost 60% because there was a huge sell-off, and I wasn't there to manage the position. And then right after that, I decided to swing the trade into the next day, and then there was news overnight about Nvidia causing a almost $1,100 loss. The next day, I came back and clawed back almost $400 in profit from the rest of the trades that I made on SPY, which is yesterday. And today, I'm hoping that I'll make the deficit back so that this account can be back to where we started. These kinds of things are expected with a small account because you have to take additional risk in order to get that reward, to get started going. But the good news is that the main account is up about $14,000 for this week, so not all that bad. I even have one SPX contract that is still running on that account. So we will see how the small account ends the week today, and we are hoping to end the week in a high note. But in the essence of full transparency, and you guys know that I'm always transparent with everything that I do, the small account is at a negative weekly P&L right now, which is okay. It happens, you know. You can't cry over spoiled milk. Things like that are gonna happen, and that's just, you know, the nature of the business. We have quite a lot of things to unpack here in terms of macro, so let's get that started. Good morning, guys. Welcome in. Appreciate you guys taking the time out to be here. Non-farm payrolls just came out. Let's see if we can get up and smash some levels. And okay, so let's go through a couple of key things. One of the key things that I'm looking at, thematic things, right? Okay, so first of all, we got a perfect 39.10 bounce. That's just how much more perfect can this get, right? We've been calling 39.10, 39.10, 39.10. Really perfect bounce on 39.10 with a strong buy up after that. I played that buy up right from there on the small account and the big account. That's what mainly recovered most of the losses from the week, or rather the bad trades that were sponged through the past 2 days pretty much. But what's more important and the more pressing that I'm looking at is the bond market. And the bond market continues to sell off here. So accelerating treasury sell-off because, you know, just added negative momentum and added pressure from the Fed of a runoff on the balance sheet, which is going to be happening in the month of September. Not only that, you had general illiquidity, and then the Fed Powell adding fuel to the fire last Friday, saying that you know, the victory over inflation is not anywhere near, etc., right? So the bond market has been pricing in for months now a possible decline in inflation, okay? But then now it's pretty much a case where we're looking at whether we can get back a soft landing or a hard landing. So which part of, you know, the bond market are we going to actually look at? And that is really the most important thing here, because as I mentioned before, when the bond market signals something, you have to be able to interpret and understand what is going on there. It is the single most important backbone of the economy, and also credit cycles are really important in terms of how equity pricing is going to pan out. So you have to look at credit cycles and the bond market in order to figure out where equity pricing is going to be, which is stocks, right? So the unknown has been really just whether we can get there, you know, the easy way or a tough way. Which the easy way would be inflation is going to go lower, and then the Fed eases off the Fed rate hikes, and then we get like a soft landing. Or the hard way, the Fed takes, you know, the most rough approach and pretty much tries to squeeze inflation back into control. But this is going to have a side quest, so you will, of pretty much demand destruction and then employment destruction and market squeezing. Okay. So after Fed's the Fed Powell's speech on Friday, it seems the second scenario of a hard landing is becoming more probable, and that's what the bond market is pricing in here with the sell-off. Okay, but whatever that we were thinking would have been the hopeful situation for easing has now pretty much become less likely after Friday. But we really have to look for fresh data now, and we have to just look for the market holding things together. We need a series of good news. That's what we really need, okay? Because apart from good news, nothing else is going to save this market right now, okay? The pressure is going to be continuing downward if things don't get better. And this morning we just got a little bit of good news, which is the non-farm payroll. So data like the job market improving, that's good news. Okay, that's good news because it shows that the economy is still robust, and job market is still robust, and the economy is strong. Okay, and people are still willing to go to work, and they're still willing to put in higher demand, because you have to always remember that if the job market is strong, that supports the economy. Okay. All right. So that's one thing that I'm looking at right now, and I will be following this thematic thing for a couple of weeks, at least getting into next week or so. Remember that seasonality points towards September being a not such a good month. And there is also a very high likely chance that we go back down to 39.10 to retest for a double bottom before we actually ultimately get the rally. Now, you have to remember that in a bigger wave structure, for example, when you have a huge sell-off, it is very, very common and likely that we get multiple retests of the same level. So you might get a relief rally first back into 40.70 or 41.82, which are the two levels projected above us. And then right after that, you might get another retest to the downside of 39.10 or 38.50 again before the actual next wave up. So we're still going to have a couple bounces here in the month of September. So if you are thinking if I should FOMO into this market and I should, oh no, this market's running away from me and I need to enter all my trades now, you don't need to. Okay, you don't need to. In fact, if you're in the realm of just buying equity and holding for long term, you have time. Okay, you have time. Don't try to rush things, and don't try to, try and catch a running train. Okay, if you didn't catch this bottom here, you will get another opportunity. I guarantee it. Because after a wave up, there will be a wave down, and so I highly recommend you not to chase anything over here. Okay, you just play it as it comes, and you will see what happens after that. Of course, we'll be tracking this play by play and day by day, Monday, Wednesday, Friday on this live stream, and so I truly appreciate you guys tuning in, and just showing up here. Consistency is the most important thing. If this is your first time here, or if this is you coming to this stream for the first time, I truly appreciate it. Remember to leave a subscribe and a like if you can. Truly helps our channel out, and we want more people to get access to this free resource every pre-market Monday, Wednesday, Friday. I think it's a great thing for beginner traders to really listen into, because we cover a lot of different things that will definitely make you some money in some way or another. Just by consensus, right? I wanna have a show of consensus from the people who are in the stream right now. How many of you have made a decent amount of money just attending this live stream? I'm pretty sure that some of you have made some money already, and I love that. I love the fact that you can attend something that's free and you make some money off it. I really love that. I love providing that kind of value, and I really hope that you guys continue to make money off the ideas that we throw out here, because that is the nature of the game. It's teamwork, and that's what makes the dream work, right? Okay, so if you have made money while attending this live stream, and you had some education or you gained something off this live stream, I would love it if you put something in the chat right now telling me if you've made money, or what you made money on, or how it has helped you. I love hearing your feedback, guys. Trust me, it's really important to me. Even if you want to see something specific that we do or we do not do, or you want to see more of something else, put it in the chat right now so that I know. On top of that, if you have tickers that you want me to break down, go ahead, drop it in the chat as well, and I will get to it right after we finish the technicals. Okay, so pretty straightforward with the bounce here, right? Retest is going to be 40.70, but we need to clear a few pivots today. The key pivots of today are going to be, firstly, we need to clear, okay, first of all, support. We need to get to a support, right? So there will be a pullback. The pullback is going to happen. What is the support going to be? 39, I would say 39, 39.50 is a solid support so far. We've been bouncing around this level, right? And then there's also 39.40. So 39.40, 39.45, between that range is good. If we go down to 39.20, I would be quite surprised, but this would be a retest of the bottom demand, and that would mean an aggressive sell-off. And as long as we can stay above here, then this opens up the 39, let's just say 40.20, right? 40.20. 40.15 to 40.20, this level right here above us, that opens up 40.20. And then if we really get above there, then 40.70 is opened up, and this is going to be a big resistance up here. Between 40.60 and 40.70 is a big resistance up here. So that's going to be the most key levels to watch on the SPX. In terms of the NASDAQ, support's going to be at around 12,176. And then if we break above the high of the day, which was 12,400, then we're likely to go retest 12,580, and also above that 12,780 eventually. Excuse me. Okay. Give me a second here. All right. Now, IWM is another interesting one because small caps were all the rave, you know, a huge rally the last time. And we have very, you know, important levels here to break. Now, the upside in IWM is actually a little nicer. And I think that, you know, there is a play to be made here. But I'm just waiting for a bounce to see and get a confirmation back down to retest some of these support levels. And I think that's going to be around 180 or so if we can get a pullback. Also, look at the VIX, which, you know, has come back into the danger levels, right? Remember, we have, these are the green levels on VIX. I would say green because I put them in yellow. But these are the more softer levels for the VIX. 16, 18, 21, and then 24, 25, 28, 31. This gets increasingly more dangerous for the VIX in terms of volatility. Yesterday we got all the way up to around 26, 27 before we had a pullback. So, you know, we're looking for a potential, you know, pullback or further pullback here, and that should hopefully drain volatility out of the market. The higher the market goes, and the fear drains out. We didn't really see much out the money betting, repeat betting or flow. So far so good. I think that, you know, hopefully we can sustain the rally. Also looking for a bounce on financials. Financials have been sold off pretty violently in the past couple of weeks. And so we're looking to take a bounce position on this, on a pullback to play the upside on financials after a breakout from this downside here. So I'll be looking to play financials. If you took semiconductors from the newsletter, beautiful sell-off, right? Who, I don't know, you guys should have definitely caught something on semiconductors this week. I mentioned a retest of that low down here at 215, and then if we break 215 all the way down into the 200 to 205, and I was very surprised that we got to around 205, but that was mainly because of news as well, right? So the increasingly bearish outlook of semiconductors, now we need to wait for a strong bounce to take some upside on this thing. It does seem like we are bouncing on a very long established trend line all the way back from the start of 2022. This was a downtrend in semiconductors, and now we might start to see that the bust cycle start to reverse here and start to get into the boom cycle. So we'll be looking to take exposure on semiconductors and financials in the time to come. Those are two sectors that I'm looking at. Oil and gas strongly bouncing as well after breaking down, but I feel like there's more further downside here than there's upside. So once I do see rejections on XOP, I will take some possible bearish positioning if we don't see stronger momentum come up here. That's some of the setups that I'm looking at for this coming week. So Monday we'll cover again. We'll see what happens today. There will also be a new newsletter on Sunday this week, and I'll be sending that out along with a trade recap and market update on Instagram as well through a reel. What other kind of content would you guys like me to put out? Is there any specific things that you guys want to learn? I would love to hear from you guys. Put it in the chat for me what you specifically would like to learn about, because I'm really, really excited to make some new content for you guys. Lululemon beat earnings, smashed earnings, up 9% pre-market here. And the rest of stocks are really just kind of bouncing here a little bit. And we'll see if they can start to gain momentum to break out. Okay, does anyone have any tickers that they want me to go through? I'm watching a couple of things here and there, but apart from that, I'm mostly done with the breakdown for the market this morning. If you missed everything that we just spoke about, when the stream's over, just refresh and you'll get the playback right away. So don't be worried. But yes, I'm taking ticker requests now, and also if you want me to answer any questions regarding the market or anything else, go ahead, put it in the chat right now. I'll do it for you. So we'll see if we can get all of this done. As I mentioned early on in the live stream, the small account, I made a big boo-boo on it day before yesterday. But hey, we will definitely come back stronger. And I can guarantee it that, with the consistency, you can see that, these are fairly consistently green. It's just these two trades that I took that went extremely sour and really bad, and this is an absolute no-no. I basically broke all of my own rules, and I hold myself to a really high standard. So this will absolutely not happen again, because I know it can be tough. Sometimes we get into these situations ourselves. Even as somebody who's been doing this for 10 years, trust me, a moment of weakness and lapse, and that's all it takes. I took a break for literally 30 minutes and came back. Went to go get some food, came back, and boom, everything I was down 60% on both of these trades, and then I was like, oh man, well, I'm gonna wait for a wave up. Wave up never came. I decided to swing it to the next day, and then overnight news hit about Nvidia and semiconductors, and the market dumped. And wake up, and the options are pretty much dead, right? So, things like that are going to happen from time to time. You're not going to be able to really control it. But my mistake was not setting a stop loss. And then on top of that, swinging the trade to the next day. I could have taken a 60% loss, but I took a 90% loss, which is really terrible. Okay. But it happens. Okay, let's do it. So, a couple of requests here. So, Tesla, first of all, the usual suspects. Okay, Tesla is currently in a downtrend, and we need to wait for it to break out of this downtrend. So, pretty much, I would say, let me see here, 1 second. So far, I think we can go a bit tighter. There we go. Okay, so far, we broke below the pivot, and then we are trying to reclaim the 280 support. Tesla has been rejected here about twice now. Twice, or more than twice actually. It's coming to the third time now. At the market open, we'll know if it's going to reject or it's going to break through with the momentum to retest 288 or 286, which is the next level that it's going to get to, if it finds momentum and continues to go further higher. So the play here with Tesla, which is going to gap up at the open, is don't trade it at the open, because you're not really going to be able to predict what's going to happen here. This has been a previous level of resistance, a big resistance level, and if we get that retrace back down, then watch for the support at 275. 275 is going to be a big support for Tesla. If you get the bounce on 275, then you can play the 280 calls into next week, or you take the 0-day expiry. But it's going to be a tough one, because this is sitting at a very awkward pivot zone, and so you want to be really cautious here. Okay, risk to reward ratio wise, The upside presents a better opportunity only if you bounce on the 275. The downside opportunity here is also decent, but you have to keep your stop loss really, really tight at around 283, 284 in order to get that downside reward for that risk that you're taking on. So you have to be really strict with your setup here. If you are indeed going for a short position at around 280, then your risk off has to be around 284 or 283 so that you can take this on the table all the way down to around 275, and that gives you that 1:2 risk to reward ratio. If you're going to take the upside, then you want that pullback into 275 or 278, and then the bounce and the confirmation of that bounce, that means it holds that level. It's, you know, it's bouncing on that level for a little while and shows you that, you know, it's building some of that demand here, right? And once you get that, then you have to go risk off at around, let's say, 274 in order to take that upside into 280 once again. So that gives you that about 1:3 risk to reward ratio. So both ways here, really, really sticky. And I personally wouldn't trade Tesla today. Just saying. It's just my personal preference here. Of course, it's up to you guys. I know that many of you degens would really love to play Tesla every single day. So that's my 2 cents, Jeffrey. I hope that helps. Okay, triple M. Oh, actually, let me see here. Yeah, no problem, man. Okay. Triple M. Oh, this thing got wrecked. Ay. Oh my. I think that it has some further downside possibly. It has not yet found a demand zone, neither has it found support. I mean, this could be the demand zone that it is entering right now, but it definitely seems like it hasn't found a firm level yet. Not to mention it's using this previous support as a resistance now, 126. I think it has further downside here. If it continues to consolidate, this is going to be a bear flag. And then, you know, if it really does break, it needs to break above 128 in order to see bullish consolidation. 128, and then it has to consolidate above 128. So you need to see a freaking solid break here, consolidation, and then more upside to come in the future. For right now, it can go anywhere all the way up to 128 and reject and come way back down again. So this is tricky. I wouldn't play this here. Risk to reward ratio wise, both sides no bueno on triple M. Unfortunately, this is it's not looking like even. I mean, you know, you would think like, oh, I'm gonna play a pullback move here, where you take a 50% Fibonacci retracement possibility, but that demand is just not kicked in yet. So unless you can get momentum going on this, there's no sparks that are gonna set this on fire yet. I would say wait for that to happen. Once you see momentum come in strong, like a bullish reversal candle, a big amount of momentum, then you can go for this one to the upside. That's my 2 cents on triple M. Nvidia. So this one's the reason for my sorrow this week, right? So Nvidia, pretty straightforward. Been sold off in a 90-degree parabolic fashion, and this has to retest 145 first. And then after 145, it can retest the gap fill at 150. This is all basing on the fact that NASDAQ and SPY can both remain bullish today in terms of momentum. Okay. Other than that, if it continues to reject, the rejection zone to watch is 145 as well. So 145 becomes the dual zone right now. This is the level at which you have to be extremely careful. And so rejection of 145 sends you back down again. And we did see some 120 calls, 130 calls being bought, puts being bought, 120, 130 puts being bought for October end yesterday. So with Nvidia, you really want to be cautious because after deep sell-offs like this, it takes a while for demand to build back, okay? Look at even here, for example, after this 90-degree sell-off, it took a couple of days for it to go back to revert, and then after this sell-off here, it consolidated and then moved lower again. So just looking at the past price action will give you a good idea of what is possible with Nvidia and what is not possible. You can see consolidation after a huge drop, and then another drop here in consolidation, and then more drop, right? So after a huge drop like this, you would expect some consolidation up into 145, ranging probably down from down here all the way to 145, and try to establish some demand here to cap some buyers and trap sellers as well, trap buyers as well. So you have to be really careful with Nvidia here. That's my 2 cents. I think it's not time to take the ultimate bullish trade yet. However, if you are purchasing shares, this is a great spot to add some shares, right? If you're an investor and you're intending to add shares, this is a good spot to add some. And then if it goes lower, you can always add some more. But this is a good spot to really grab a good amount of shares to hold for long term. Okay. CRM. I hope that was helpful, Toby. Okay, so CRM consolidating sideways here and then breaking down. Oh no, this spells pain. This is painful. Ouch. So you have this, and then you have this. It's breaking down here. This does not look good. It likely to retest around, let's say 162, 160 to 162. From here to 160 to 162 is a possibility, and then after that you have to look and see whether it rejects 160 to 162, or it continues a downward descent here. So let's go back and look at the daily chart here, because we need to go further back a bit. So this is not really a established demand zone neither. The demand zone's a little lower than here. The demand zone seems to be at around 137 all the way to 145 on CRM. So it does look like there's more pain possibly on CRM, but I think that there will be a little bit of a relief rally first before you get there. There's a possibility that we get a little bit of a buy-up of some kind, all the way back up into, let's say, the 159, 160. To retest these highs here, and it can go all the way up to 162 to retest. So 160.5 to 162.5 is your levels for the upside projection, and then you have to see what happens after that. After that, it gets a bit sketchy. We'll look at it again after that. I'll set an alert here. If it starts to rally past 155, I would be happy to take a. Actually, it's already at 155. Starts to rally after 156, I guess. I'll add an alert right here to see if it gets to the upside there. Okay, there you go, Joseph. I hope that's helpful. Meta. Okay, so the next one is Meta, and Meta has been consolidating sideways for a heck of a long time here. So this is pretty clear, established, like I want to say price action in terms of waves. We want to play this just pivot to pivot, and it's just very messy. The only two pivot points that are really that stick out here are 172 and 154, and anything in between, you don't want to touch it until it gets to either one of those 2 points, and then watch it when it gets to those 2 points. So with Meta, you want to watch at 172 what happens if it gets up there, and does it break 172, and if it does, then it opens up 182 for the upside. Or if it rejects 172, then you can take a short trade back down into the 160s and 155, back down here, keeping a very tight risk off at around 175, for example. Taking it in between here, like for example, like right here, even though on the 1 hour I can see a kind of a pennant is forming. It's a very tight pennant, but I personally don't like these kinds of setups. You can see that there is kind of a pennant forming. It's pretty much a very tight pennant. And then there's this upside here that's squeezing up. But if you're going to go for this squeeze to the upside, it's not going to be good. Why? The risk to reward ratio on either side is going to get you clapped. Let's say you take a bullish position here. Your risk to the downside is as equal as your reward to the upside. You're capped out 1:1. This is a terrible trade to get yourself into, right? Unless you're scalping, which then then you don't really care, or you don't really bother about any of this, right? But if you're even taking a day trade, then you have to be really careful, because you have to take into account risk to reward ratio structures when you're playing a wave in any fashion. Okay, so if you're taking this upside here to 172, then make sure that it's a scalp, and make sure that you're not taking a day trade, because if you're going to take a day trade and you're going to hold this throughout the day, you're going to get yourself into a sticky situation if it just pulls back. Okay, the risk to reward ratio is not going to be in your favor. Okay, so that's that. Spot on what I was feeling with Tesla. Awesome. Wanlin, I hope that was helpful with Meta. Thank you guys for attending today's live stream. A lot of you turned up. Once again, remember, if you're here and you enjoy whatever that we cover, leave a subscribe and a like. I truly appreciate you guys taking out the time from your schedule to be here. Small account is a little down for this week, but don't worry, we're going to get it back up. Main account is up about $14,700 for the week, and we will continue on this trading session today. And live with the team on Discord for the market open. So if you're keen on joining Discord, or you want to know more about it, or you just want a coupon code to test us out for a month, DM me on Instagram and I will set it up for you. Okay. Apart from that, I really truly hope that you guys have a great weekend and an amazing trading session today. I'll see you guys back on Monday again. And we will be sending out that newsletter and also putting out more content over the weekend. So keep your eyes out for that. And yeah, we'll see you guys very, very soon on Monday. So take care and peace, guys. Love you all. And yup.